Hello everyone and welcome to today's webinar, Doing Business in Canada. My name is Manoj Valiant and I'll be your moderator. Before we get started, I'd like to go over a few items so you know how to participate in today's event. By default, you'll be listening through your computer speaker. If you prefer to join over the phone, just select telephone in the audio pane and a call-in information will be displayed. You can submit your questions anytime during the presentation by typing your questions into the questions pane of the control panel. We will be addressing these during the Q&A session at the end of today's presentation. A copy of the presentation deck and a recording of this webinar will be made available to you before the end of the week. I would now like to introduce Chris King. Chris is a U.S. East Coast representative for the province of British Columbia. He works to connect companies to the information and resources they need to locate or expand to British Columbia.
Thank you so much. Good afternoon. As I said, my name is Chris King, and I'm pleased to represent the province of British Columbia here on the U.S. East Coast. Myself and my colleagues on the West Coast, with an office in Silicon Valley and LA, provides hands-on, fully funded, no-cost assistance to U.S. companies considering setting up, expanding, or maintaining physical operations in British Columbia. If you're exploring British Columbia, or any province in Canada for that matter, I can confidently state we are most likely one of the greatest resources you may not have heard of. We connect you to the free services and free resources that you need to locate or expand into BC. We get you the answers and the connections you need to make a location decision. And when you work with us, three things happen. We get you to market faster, we help reduce your overall operational risk of expansion, and we save you money. And for companies on the call today that are looking across Canada, I can connect you with colleagues in the Canadian federal government who have offices and teams like ours across the whole of the United States, and they too can provide the same services. So it's my pleasure to kind of give you a brief overview of our two presenters today. The first being Jeff Christie, who is a partner with Boast Capital. Jeff is responsible for new client development, partnerships, and strategic growth at Boast. And Boast is a team of engineers and finance professionals with over 20 years experience in helping companies in Canada and the U.S. claim and maximize R&D tax credits with really strong knowledge on recovering the cost of Canada's scientific research and experimental development, or SR&ED credits as we call them, as well as support in helping understand interactive digital media tax credits and the U.S. R&D tax credit program. Also joined today by Ragu Bhargava, who's the co-founder and CEO of Global Upside. Global Upside is a leader in providing integrated accounting, payroll, HR, tax, and compliance services in over 90 countries, from startups to established multinationals. Examples, some of their clients include A10 Networks, Aruba Networks, 8x8, Real Networks, Rhapsody, Zillow, and many, many more. Ragu goes by the mantra, impossible is not in my vocabulary, which is a great saying, and has helped Global Upside clients successfully navigate some of the trickiest business environments across the globe. And previously, Ragu was the CFO of Active Identity and held leadership positions in several companies, including Deloitte, NetIQ, etc. And so now I'd just like to give very brief remarks in opening about Canada and British Columbia to put some things into perspective. So first off, many of you on the call are obviously exploring Canada, but just to reinforce the messaging about why Canada. For years, Canada has been consistently recognized as the best country in the G20 to do business with a strong growth record, leading all of the G7 countries, and where by far we have the lowest effective tax rate, about 17 percentage points lower than the U.S. This is supported by having the soundest banking system in the world, along with the most highly educated workforce among the 35 member countries of the OECD, the Organization for Economic Cooperation and Development. And just recently, a study that came out ranked Canada #1 in the world for the lowest business cost for industrial leases, for electricity costs, and for corporate taxes, and ranked Canada as number two in the world for lowest business location costs for corporate services, manufacturing, and for transportation. So a compelling message for Canada. And just very briefly about British Columbia, which I represent, for many of the companies on the webinar today on the West Coast and the U.S. in particular, we have seen significant investments from companies, tech companies like Microsoft and Amazon, along with other sectors like biotech, life sciences, professional services, manufacturing, etc. And what has been driving their interest in British Columbia is now driving interest from across the whole of the U.S. Access to world-class talent, lower overall operating costs, and ease of immigration. And this interest is further amplified by one of the most competitive tax regimes in Canada, first-class infrastructure with Vancouver International Airport ranked #1. And we are the closest major airport port to Asia. We have some of the lowest energy cost rates in North America, and BC is one of the top 10 global locations to recruit, employ, and redeploy talent. And we are now a magnet for talent, for investment, for venture capital. And today, Vancouver is ranked #1 for head office growth all across Canada, and we're #1 for job creation across Canada. So thank you very much for that opportunity to introduce Canada, to introduce British Columbia, and it's now my pleasure to pass it off to Ragu.
Thanks, Chris. And everyone, welcome to the webinar. So the first slide that I'm talking about is just the agenda items I'm going to cover from location, footprint, entity setup, and so on and so forth, all the way ending up with compliance and local requirements. With a little bit higher emphasis on the HR issues that you might face when you go into any new country, though I'm going to talk a little bit more about Canada. Next, please. So one of the things that was mentioned just now was this issue of the deep water port, access to Asia, and things like that. And so one of the things you have to worry about as starting a new business or going into a new country is, what is it that you're looking for? Do you have manufacturing in China or someplace like that in Asia that is being brought over and you need a good port? Do you need easy travel access, things like that? But most importantly, you obviously need to know where's the best talent available in that country, in that region. And there are a few centers of high-tech talent, at least, from Vancouver being #1, but Ottawa, Toronto being a big one, and places like Calgary, which we may not think about, especially if you're based in the Silicon Valley, but Calgary has a pretty robust oil and gas industry and a lot of R&D technology companies based out of there around that. And then also, you have to think about how you're going to get organized in terms of what are you doing there and what is your long-term play. So what are you doing there if you're just hiring one employee to explore some sales opportunities? You may have different options versus if you are establishing an R&D center and something that that can be capitalized on from an R&D credit and things like that, which again, the others are going to talk about that. Jeff is going to talk a lot more about that. But these are issues that you have to think about, and as you think about that, you think about either going as a representative office for that one exploratory type situation, all the way to establishing a branch, or most likely a subsidiary as you're planning to expand your footprint and the number of people that work for you in Canada. You also need to worry about accounting setup, tax considerations, and money movement. So money movement is very important nowadays because of the KYC and UBO, anti-money laundering, and requirements in almost every country. So you can't just walk up into a bank and say, I want to open an account for my company. You need to do a lot of prove to the local banker who you are, who owns the company, things like that. And those requirements are getting more and more stringent everywhere in the world. Tax considerations, obviously, part of it is the R&D type credits, but part of it is what is the tax rate in the country. And as you heard, the Canadian rate is 17%. So yeah, it is a very competitive rate, at least compared to the US, and that allows you the access to good level of talent and stuff. Accounting setup is important because if you're going to establish a subsidiary or a branch, you may have compliance requirements, which I will talk about in a little bit later, but you have to address those, and to address those, you need to have an accounting setup because you need to not only process payroll, but keep good records. So at the end of the month, quarter, annually, the filing requirements that are applicable to you are properly addressed. Obviously, plan for growth. So don't go into an area because you found one engineer there and he may be based in some small town in Canada. You need to think about what are your plans and where will you find the next 15 or 50 engineers. And I mentioned some of those locations. And even in these locations, you may need to worry about because of the dependency on some of these are large cities, so commute issues, things like that. You do need to plan a little bit more than just saying, okay, I'm just going to Canada because it's the next country over. Obviously, you have permanent establishment risks or PE risks. So as you hire the first employee, if you end up hiring that individual from the U.S., the U.S. entity all of a sudden has what is called PE or permanent establishment in Canada, and that raises the issue of how do you carve out and pay taxes on that one employee's wages and the profits and revenue he's generating over there. And maybe it is not as important in year one, but as your operations start to grow, PE risk has to be properly managed, which is what you do by incorporating a subsidiary or properly registering a branch, but and being supported by the right accounting setup. Obviously, there's intellectual property considerations. If you're doing R&D in a particular country, how do you ensure that the IP that is being developed is owned by the right entity, whether that might be a U.S. company, a U.S. entity, or maybe a entity based somewhere else in the world. But it is important to make sure that you address those properly and structure it the relationship properly with your Canadian subsidiary so that the IP at the end of the day is owned by the parent company. Now you have people, you have operations, you have business running there, but the important question that should not be ignored is what kind of support do they need from headquarters? And is it just an issue of providing them some supervisorial support? Is it much more where your head of R&D or the managers that the Canadian employees report into travel on a regular basis to Canada to not just build a relationship, but also make sure that they are on the same train that is being driven from corporate so that the product development and the culture and the team, they feel like they're part of that, and the parent company's team and are working towards developing, delivering, behaving like the management wants them to behave, obviously barring any cultural differences, because obviously whenever you go overseas, you have to be very mindful of your cultural differences from country to country. Next, please. So talking about some of the compliance that you have to worry about just walking into a new country is, and this applies equally in Canada, for example, having a registered office, an office where the government of Canada or others can send you mail, and it is a matter of public record, so you do need to make sure that you have it properly structured, whether it is through having an actual physical office in Canada because of the size of operations, or if it's the first few employees, make sure you're not using their home addresses because they will get government official notices that come from time to time in the regular course of business. Substance over form, I talked about it a little bit on the previous slide. You need to make sure that you are structuring it properly so that if the government of Canada, or for that matter, the government of US, your parent company's resident country, comes after you, that you're not treating those expenses or those revenues or those activities properly. You can clearly lay out how it is structured, how you're dealing with those situations, how there is a separate payroll, how there is a separate set of books, how the profit is computed and stuff, and how taxes are paid. So this is very much a tax issue, income tax issue, I should say, and it is something that every government is looking for more tax dollars. So it does become an issue as your operations in any country start to grow. Obviously, in countries like Canada, there are various forms of what we may think of sales tax or VAT, and there's the harmonized system or the provincial system, or the Quebec has its own QST, and those are just various acronyms for either federal or state province taxes that you need to file. Some of them, depending on volumes, could be monthly, maybe quarterly, sometimes maybe annual because of low volumes, that kind of stuff. But you do need to make sure that you file those. And in Canada, one of the things that they've done an excellent job of is availability of information on, say, the Revenue Canada website. There's a lot of stuff available, both in French as well as in English. French mainly in Quebec, but also it tells you what your requirements would be in year one and things like that. Obviously, there might be statutory audit requirements. There is no audit requirements per se I'm sorry, there are some audit requirements even for private companies, but the shareholders of the company can opt to not get an audit done, and it's a matter of formality, but these are things that you need to be aware of, and use the right law firm or right partner to incorporate properly so you don't get caught where you didn't make those right elections up front. Because again, if you have a very small operation, what do you care about getting a statutory audit done? And in like most countries, there are annual reports that are required, and those just need to be prepared and filed. Again, compliance requirements, once a year requirements, but these do have to be addressed properly. If they're not, you will get notices and you can get penalties and interest and things like that. Next, please. Okay, it's time for a Q&A. Manoj, you can take it over.
Okay, so now we're going to be doing a poll. And so if you look at your screen, you should see a poll come up.
So the choices on concerns of doing business in Canada: employment law, finding the right talent, cost of doing business, staying compliant, taxation. So you can pick one or you can pick multiple as applicable. We'll give you a few seconds, 30 seconds or so to answer. And here are the results as they stand right now. So staying compliant and taxation are the two biggest items. And obviously this is not going to add up to 100% because you have multiple selections you can make. But employment law, rightfully so, is an equal, 30% of people are concerned about that. And we will talk about employment law and HR issues in a minute. But staying compliant, I talked about that. Taxation, we talked about that a little bit. So next, please. So accounting and payroll. So as you know, with most of these accounting issues, with most of payroll issues, there are deadlines. So, you know, whether you pay twice a month, once a month, you have the deadlines of payroll, but you also subsequently have deadlines that you have to report. You have to pay the withholdings and payroll taxes and stuff like that to the government, and obviously you have reporting requirements under that. In countries like Canada, which is very similar to US in some respects, there aren't very many accounting deadlines, reporting requirements on an ongoing basis. Most of them come at the end of the year, for example, with income taxes, things like that. But you may have, like I said, VAT type taxes, GST, HST, PST. Those requirements may kick in depending on volumes from monthly to quarterly to annual. Obviously, you need to get the payroll done right, and so you need to have the right partner identified. A lot of us are used to using ADP in US as an example, and ADP has good solutions in Canada also, but you do need to make sure that you engage properly, timely, and that you have your corporate structure well defined so that when your payroll starts, when you first put your first employee on payroll, that it can be processed properly. From an accounting perspective, there's obviously management and statutory accounts, which is more a headquarters issue in terms of how do you control the business, how do you have visibility into where the money is going, whether it's in payroll or other activities, things like that. And to the extent you're getting some benefit from the government, subsidies, R&D credit, you may have reporting requirements under that on a periodic basis. Obviously, there are corporate taxes, so income taxes, things like that, where if you are hugely profitable and around your Canada operations, you may have to make periodic estimate tax payments. And even on a cost-plus basis where you are actually billing from the U.S. and just marking up local expenses on a cost-plus basis, you may still need to make estimated tax payments. The treatment of stock transactions is different in different countries. In the U.S., you're all used to how to treat those, but in Canada, you do need to do an analysis. You do need to evaluate what do you need to worry about from a local taxation perspective and how those are perceived by your local employees, given the different tax regimes. And then lastly, there's obviously accounts payable, accounts receivable. There's your corporate policies. How do you implement and how do you get them across the border so that those local employees are also complying not only with local requirements, but Canadian requirements, but also with the parent company's requirements, especially if you're a public company and you may have insider trading policies, you may have ethical behavior policies, things like code of conduct, those kind of things where you need to make sure that you're addressing them properly. Next, please. So 33% of you had a question on the employment law or concerns around that. And this slide will go a little bit more in depth. Very different from US, there is no at-will employment in Canada. In fact, there are various rules around hiring people that are very specific to Canada. For example, once you turn in an offer letter, an employment contract, as it is more commonly known, to the Canadian employee, they have 3 days to sign it, and they also have a couple days to renege on their signature if they decide they don't want to work for you for whatever reason that might be. There are and everything is governed by contract, so even though there are national holidays and even though there are vacation standards, you still need to put all of those in the contract. And these holidays can vary from province to province, depending on which province you're going to. To the extent you're in one province, a little bit lesser of an issue. Obviously, compensation and benefits is always an issue. You need to make sure that you cater to the right employees at the right salary levels, but above and beyond the right salary level are issues around statutory and supplemental benefits. We talked about stock options, and to the extent you're sending people from foreign countries to go get your operation started or manage or for other reasons to Canada, you have to worry about expats and how they are treated and how do you make sure that you address their needs upfront properly. On the hiring front, I talked about the employment law. There are work time regulations. There is just because we have a North American free trade agreement with Canada doesn't mean you can just cross the border and go to work. You still need a work permit from the government of Canada, and those typically they are not hard to get, but if you start working without that, your employee can get in trouble. And if you have employees that are constantly in and out of Canada, managers that are residing in the U.S. or other employees residing in the U.S. and working here but going to Canada on a frequent basis for work, you need to make sure that they have the right paperwork with them. You need to make sure that they have the right visas and stuff, because that can create problems and they can be stopped at the border and turned around. Obviously, with contractors, just like in the U.S., you need to know your risk and how to manage that. Contractor and employee issues are the same, almost the same as they are in the U.S. Next, please. So we have one more poll, and this is about how familiar are you with the R&D credit program that is offered by the Canadian government. Obviously on this one the choices was only one, very familiar, somewhat familiar, or not familiar. So more than half of you are not familiar with it, so well, that's where Jeff comes into play. He's going to talk a lot about that. And then I'm going to turn it over to Jeff.
Thank you very much. Well, it's a good thing that I've been invited here and that everyone's on the webinar, because it looks like a lot of people aren't familiar with the SR&ED program, and that's what Boast Capital deals with in Canada. So we're going to go through what the program is, the benefits of claiming SR&ED, a little bit of a case study to show the type of return that you could get, and then some requirements that you're going to have to think about right away in terms of documentation and time tracking and financials. And then some quick do's and don'ts that you can do right now to set yourself up to eventually claim for SR&ED. So we'll move to the next slide. So what is SR&ED? So SR&ED's an acronym, and it stands for Scientific Research and Experimental Development. The SR&ED program, or Scientific Research and Experimental Development Program, is a federal program in Canada that the provincial, each province piggybacks off of in its own way. So depending on if you incorporate federally and where you set up your office, there'll be slight differences in return rates, but the general principles of the program apply across all. It's a $3.4 billion program a year, as we'll find out eventually. Some of this is tax credit, and some of it's actually refundable cash that's going to come back. Before we move on, I want to just highlight, there's two words here, scientific research and there's experimental development. There are actually two distinct sides to the program. And only about 5% of claims go in under scientific research. Most of that is research done at universities, and it's done just for the pure sake of advancing scientific knowledge. The majority of the claims, about 95%, go in under experimental development. And experimental development is really about companies encountering technological challenges and working to iterate to overcome them. Next slide. So what are some applicable industries? SR&ED's a spend it to get it program, so it's not an upfront grant. It's something that you've spent this money already, and then you're able to recoup a portion of that money when you submit your corporate tax returns. It is 100% technical based. It's not anything to do with the novelty of your product, the uniqueness of it to the market, addressing a unique market way. So there's really no business aspect to it. It's completely technical. So a lot of the technical that you can apply are going to be within the software development area, biotechnology, oil and gas and energy. There's a lot of technology around that. The pure extraction of oil and gas doesn't count, but all the technology that goes into find it, drill it, produce it, transport it counts. Agriculture products, so the development of new seeds, new farming techniques. It's really endless, the amount of industries that can claim for SR&ED. Next slide. So what's going to qualify you for SR&ED? So let's start on the technical side first. There's three main criteria to qualify for SR&ED. The first is that you, in your development process, whatever technical work you're doing, you encounter a technological challenge. Now, this happens almost daily in the development environment, and what makes a challenge eventually SR&ED eligible is that to overcome it, there's a technological uncertainty. And an uncertainty means two main things. One, that there's no standard engineering and or development process that's going to allow you to overcome that challenge. And there's nothing in the public domain that tells you how to go do it. So then to overcome the challenge and the uncertainty, you're now going to go through an iterative process. Some people will call it smart engineering, but essentially you're going to devise, here's what we think will work. You build it, whether it's software, whether it's within biotechnology. You test, and based on those test outcomes, you continually iterate until you overcome your technological uncertainty and solve the challenge. Now, failure along the way also qualifies for SR&ED, because if you fail in an approach, you now know where not to go. You've actually gained knowledge within the company. So the idea here isn't about being unique to the market, like I said before. It's all about encountering technological uncertainties and iterating through the process, because there's no known way. This isn't massively grand R&D. It's not, well, if Google can figure it out, then it doesn't count because, you know, we can't figure it out. It's all within the context of your own company, the access to resources that you have, and the technological challenges that you're trying to come through. One thing I'll say about this is most of the time you can find a partial answer to the technical challenge and uncertainty you're facing, but you might have to iterate and figure out the remainder to that answer. So it doesn't have to be there's no answer to this. It can be that there's limited answers, or the answer only gets us part of the way there. Next slide. So again, the examples, like I say, are quite endless. Within the software development area, it's not too granular the way you have to go. There's high-level things that would eventually lead to probably SR&ED eligible work. So that'd be, are there scalability issues? Is there security issues that you're working through and trying to overcome within your platform? Is there a speed issue, loading issue? Is there a data handling issue? And if there's not standard ways to overcome that, then there's a chance that you can be SR&ED eligible. Like I said, in the agriculture and the biotech space, usually in the biotech space, you're not actually going into what you're developing without having large technical unknowns. So usually at the beginning, you already know that you're going to encounter this type of work along the way. Next slide. So who can claim for SR&ED? So the key thing in here is to claim for SR&ED, you have to be a Canadian corporation. Now, the ownership of that Canadian corporation can be in many different ways, but you have to be a Canadian entity to claim the tax credit, and that entity needs to file for taxes. So there's going to be two groups that you're in. So you're either a Canadian-controlled private corporation, so this means that you're a corporation in Canada and that you're wholly, or you're owned, the majority of your ownership is Canadian-based. Or you're going to be a non-CCPC, so you're still a Canadian corp, but the controlling interest is either foreignly held, or in this case, you are a publicly traded corporation within Canada. So it's really important to know which side you're going to be on, because the return types are very different. So again, this is something as you're setting up, and they referred to it earlier, is that you really got to make sure that you set up in a way, and you'll see, we're going to want to be in this CCPC category. So as you set up your Canadian entity, if you're doing experimental development and work that could qualify for SR&ED, you're going to want to find a way to be able to set up within that structure, because the return amounts are much higher. Next slide, please. So what can you claim for SR&ED? There's three main things that you can claim back on. So you can claim back on salaries. So these are employees that are getting in Canada what they call a T4. So that's the proof of employment payment through a year. You can claim subcontractors. Again, the subcontractors and employees, or the salary amounts, both have to be Canadian. You can't be subcontracting outside of Canada or hiring employees outside of Canada for the sake of SR&ED. So we do want to say that as I talk about all these quote-unquote rules, this all has to do with SR&ED. You can be a Canadian corp and hire foreign employees. That's just fine. You can also claim back on materials. So these are the three things that these employee salaries, subcontractor costs, or materials that are transformed or consumed in the process of going through those three criteria we spoke about before are what you can claim back for SR&ED. So if you're a non-CCPC, like we spoke about before, this tax credit from the federal side is non-refundable. So it's just going to be a tax credit, and you can either carry that back 3 years or indefinitely forward to apply one-to-one against any taxes owing in the future. So if you set up in this way, you have to make sure that you're eventually going to have some revenue that runs through this company so that you're going to be able to be in a taxable position and use the tax credits. Now, for some companies here, if you're in Alberta, or if you're in Ontario, or if you're in Quebec, the provincial side is actually a refundable tax credit. But in BC, in Saskatchewan, and some other provinces, the provincial side is non-refundable. So again, you'll see in the next slide, if we go there, why we want to try and set up as a Canadian-controlled private corporation. So as a CCPC, you can still claim for salaries, subcontractors, and materials, but you'll notice the return rates here are much higher. So we're looking at 64% back on qualifying spend for salaries, 32% for subcontractors, and 42% for materials. The key thing here too is that the federal and provincial amounts are going to be fully refundable. So they're refundable ITCs, refundable investment tax credits. Essentially it means cash back into the company, not a credit that you'll have to use against revenue. So not only here are the return amounts much higher, the type of return being actual cash is much more valuable to a business. Next slide, please. So let's go for a quick case study. We're going to say that this is a software company with operations in Vancouver, and they're a non-CCPC. So they've set up in a way that their ownership is still in the US, but they own the Canadian corporation. Now, if your company is within not in the ICT sector, so biotechnology, manufacturing, hard engineering, electrical engineering, I mean, you name it, just replace the word developers for whatever you call your technical staff, and this case study still works. So you're a software company in Vancouver, you're held by your US entity 100%, you have 7 developers, 1's working on front-end work, 6 on the back-end work. Each of them are getting paid $75,000 per year, and we're going to just assume that about 65% of what they're working on a yearly basis is going to qualify technically for SR&ED. Next slide. So front-end development is typically not eligible. One area of science, the social sciences, are excluded from SR&ED, and a lot of the times the CRA who administers, the Canadian Revenue Agency who administers this program, will view front-end development as social science work. So let's exclude that salary. We're going to create an expenditure pool. So we have $75,000 salary. We'll take 65% of that, and we got 6 employees. So we got a nice pool of $292,000. We have something called a proxy overhead amount, so we're allowed to gross up the salaries by 55% to cover the overhead that we might have associated with them and the work. And when you do all that and calculate that 32% return, you're going to end up with about $93,000 worth of investment tax credits, or ITCs. Now, because you're based in BC, that is purely a tax credit. So you got to make sure that you're in a taxable position of at least $93,000 to be able to use and actually realize the gain on that. Next slide, please. So if you weren't a non-CCPC and you were a CCPC, that 93 would actually double and would be completely refundable. So what do you need to do to be able to claim SR&ED? The SR&ED claim goes in with your corporate tax return, which is typically filed anywhere from 2 to 3 months after your fiscal year end. So if you have a fiscal year end in December, most companies are filing that right around March. What you need, there's a lot of technical reports, financial reports that are put together, and to support those reports, this actually isn't submitted, but if the CRA chooses to review your claim, you need to have this type of supporting documentation. And the first is on the technical documentation side. So the CRA requires that the documentation needs to be contemporaneous, so created at the time that the work happened, be dated to prove that, and really highlight the technological challenges or obstacles. So if you're developing software and you're having a scalability issue or a speed issue, you know, the load time was XYZ. We tried this over a period of 4 months, and we got the load time to something better. That's the type of stuff that needs to be tracked. Most companies typically track this type of stuff, and if they don't, we can help them put processes in place to ensure that they track this for uses beyond just SR&ED, so not just for SR&ED. Next slide, please. You also need time tracking and some financial statement work. So time tracking is important if you're going to claim your employees' salaries. So you're going to say that this employee spent 34 or 82% of their time working on the technical work that we're claiming, and the CRA or the revenue agency is going to want to see, show me the proof that this happened. So this could be as simple as time tracking through Excel spreadsheets. If you're developing software, you might be working in an agile sprint type method, and you're going to be working through JIRA, assigning points. There's lots of ways to track time, but it just needs to be tracked. The one thing I will say about time tracking is we're not talking 15-minute increments on a daily basis. We're talking half-day, quarter-day increments logged on a weekly or bi-weekly basis. So it's not going to be administratively burdensome to be able to do this. And then finally, what do you need for your financial statements? You just need proper financial statements. You need to recognize the expenses and the period that it incurred, make sure that they're actually paid. So simple back office stuff that you just need to make sure is there. Next slide. So when to claim? As I mentioned, you can claim for this through your corporate tax return, but you actually have 18 months to go back. So for companies that are just coming up to set up in Canada, this doesn't matter. But if you had an entity open for the last 2 years in Canada and you're like, whoa, I'm just hearing about this, we're definitely doing work, you still have time to be able to go back. When you claim, there's two types of claims. There's a current claim and there's an amended claim. So your current claim, you're going to claim within 6 months of your year end. And the CRA says they'll turn around that in a maximum of 4 months from when you submit it. If you submit an amended claim, which is 7 to 18 months after your year end, the CRA says they'll take up to 8 months to return the possible outcome on that. So you can really see by staying current and staying up to speed on submitting at the right time, you get a quicker return, so that's going to be cash back into the company much quicker. Next slide. So some quick do's and don'ts. If you're going to do this now, pay yourself and your staff from your Canadian corporation. Again, it's a spend it to get it program. This isn't a grant, so it's not upfront money. You need to spend it first and then claim portions of it back. Start time tracking and proper documentation now. Again, it needs to be created contemporaneously, and this is something that we can help you with. And finally, incorporate your company in the right way up in Canada. So there's lots of ways to do it. I will leave that to conversations with lawyers and even with Global Upside to make sure you're doing it right. But as you can see from the case studies, you want to make sure that you're classified as a Canadian-controlled private corporation, because for SR&ED, the return amounts are going to be much bigger, and how you're going to get the return, being in cash, is going to be much more beneficial for the company. Some things to don't do. Don't underestimate the importance of documentation. It sounds a little bit repetitive, but it's because it is that important. If you're looking at SR&ED, don't focus on the business opportunity. The business opportunity is probably why you're doing innovative work, but when preparing and submitting SR&ED claims, it's all about the technical work, not about the business opportunity. And then finally, don't leave claims until the last minute. You submit within 6 months, there's a 4-month turnaround time. So the sooner you submit, the sooner you get your claim turned around, the better chance you're going to have cash that's coming back into the business that you can then put into further development. Next slide. So we have a guide, your ultimate guide to claiming SR&ED tax credits, that will go into some of these topics in more detail. At Boast, we help companies. We have a team of engineers and financial professionals that help and prepare these claims from beginning to end for companies. So we'll come in right at the beginning, we'll make sure everything's set up for time tracking, document tracking, we'll check in proactively throughout the year, we'll prepare your entire claim just based off interviews, we'll defend any claims that go to audit, and we'll do it all on a contingency basis. So we're well aligned to make sure that you're set up and ready to go for claiming SR&ED. So this program has many, many more facets. This is a nice high level. Hopefully, if all of you retook that poll, you'd at least have moderate knowledge now about SR&ED, if not more. That's all I have. If we go to the next slide, you'll see my contact info. Oh, sorry. Here's a poll that we'll ask where it talks about following up. If you want us to follow up with you and have quick conversations.
All right, everyone, we're just collecting the answers to the survey, and we're actually getting all the questions that people submitted over in today's webinar, and we'll be starting those soon. All right, thank you, Jeff. We had a lot of questions that came in, and we're going to be beginning answering these now. As a reminder, you can still submit your questions through the questions pane in your attendee control panel. And the first question that we have is around HR compliance, and it says, for a new company starting up in Canada, what should be the top 5 items on our checklist? And this is open to all panelists. So again, it's HR compliance, and it says, for a new company starting up in Canada, what should be the top 5 items on our checklist? So Ragu, do you want to see if you can answer this question?
Well, I can jump in quickly. Well, if you're looking from a straight shred perspective in HR, you're going to want to try and set up everyone as an employee. The return amount is much greater that you're going to get from shred, and I guess possible liabilities behind the contractor if they're only working for you is much less. So that money is a lot more guaranteed. So from a shred perspective, that would be the best way to go.
And then our next question we have is more for Chris. It says, we currently have a Canadian R&D subsidiary receiving rebates and hired a salesperson in the same subsidiary. Is that okay? And Chris and Jeff, if either one of you can answer this question.
Yeah, I would just comment that that's more of a kind of a business advisory question that should be answered by them. Maybe Jeff, you have some context for that.
Yeah, I have some ideas for it, but nothing that I would professionally. I have some personal ideas for that, but nothing professionally that I would be able to offer in this type of setting.
And Jeff, we have a question that may be related to you. It says, in R&D tax credit, how much should that be treated post an acquisition?
Yeah, so if you're a U.S. company and you're purchasing a Canadian corporation, it's really going to depend on how that purchase happens. So if you're purchasing the assets of the company, then the actual shell of the company is still existing somewhere else. So the whole idea would be to actually purchase the full entity, and that entity, you'll still own the rights to anything back or going forward. So after you purchase the entity in Canada, you can go and say, okay, did they not claim in the past on possible work? So you can look at it within that way. There is ways, if they have been claiming shred or didn't claim shred, to look at different valuations in the purchase agreement. But I won't go there again. I know that you should look at it, but someone who deals with valuations will be able to give much more relevant information than I could.
Thank you. And the next one, Chris, this might be for you. It says technology. It's around technology innovation in the energy sector. Any incentives for energy? Any incentives for energy sector innovations?
Yeah. So across Canada, you'll find different provincial incentives. Some provinces are a little bit more aggressive than others. In clean tech and renewable energy, BC has a very strong position. Very strong proposition. So there are available credits and incentives, but it's really dependent upon the company. So it's probably best for us to kind of follow up later offline to kind of discuss what those are. But in BC, just very quickly, we get 8% of the population, we get 10% of the clean energy and renewable sectors that are operating in BC, so it's very, very strong. So I'm sure that there is an opportunity for us to have a discussion. So probably best to follow up by email instead of a call.
Okay. And Chris, we might have another one for you. It says, if a company incorporates at the federal level, do they need to register with the provinces?
Again, this is more of a legal question, and I think Ragu and Global Upside can help advise on that. And I would imagine that would be best suited by a firm like Global Upside.
Yeah. So let me take that one. Just like in the U.S., you may have an incorporation in Delaware, but if you're doing business in California, you need to register in California also with the state. Similarly, you can have a federal incorporation, which is what we recommend to a lot of our clients. But if you go into the other provinces, which you have to be at least in one province, you would need to register with that province for all kinds of taxation.
And thank you, Ragu. And we have a question for you, Ragu. It says, can you elaborate more on payroll tax issues for those crossing the border to work in Canada and vice versa, Canadian employees working in the U.S.?
Yeah, so typically there is a look-back period which says if you have been working in a foreign jurisdiction or if you are working in the local country for more than 180 days out of the last 365 days, rolling calculation, then you are subject to taxes in that country, and because that is used as typically as a threshold for establishing residency. So if a Canadian employee is working in the U.S. for more than 160 days or vice versa, you have taxation issues, payroll taxation issues for that employee, both from a host country, Canada, U.S., to the destination country, U.S., Canada, whichever way this is going.
Thank you, Ragu. And then Ragu, we asked the first question. I think you might have technical difficulties. It was around HR compliance. For a new company starting up in Canada, what should be the top 5 items on our checklist?
Yeah, so this goes back to one of my slides where I talked about, employment is not at will, so you have to think about any Canadian compliant contract, and then you have to think about all the benefits and stuff, and also about which province they're being hired. So the Vancouver template may not, or British Columbia template may not work in Quebec, and in Quebec you may even have language requirements. So these are the customization needed for hiring different levels of people and in different provinces should be remembered. And then yes, there are a lot of statutory benefits because Canada is a very socialist country, but they're always looking for the supplemental benefits to enhance their overall benefit program, and that's another thing that you have to worry about. And then there is issues, say, for example, sick leave in Canada is optional, but these are things that you just need to know. And one of the warning red signs is don't make a verbal offer, only make a written offer, because verbal offers in Canada are as enforceable as written offers. Yes, there is a burden of proof, but you have to be very careful. And there's the other things that I mentioned in terms of, they have 3 days to sign, they have 2 days to renege if they decide to do that, and make sure they only start after the contract has been signed. Even if it's the same day or the day after, you have to make sure that they sign it before they start. Otherwise, it can create problems.
All right, and Jeff, it looks like we have a question for you. It says, I have been working on an R&D for a medical device, and he's not able to keep time track or document. Can he go retrospect and show any claim towards SR&ED?
Yeah, so good question. So all the documentation I talked about is best practice. It is not a requirement to be able to submit. So as long as the work actually happened, you can still submit for a SR&ED claim. You just need to know that the risk is there, that if the government chooses to audit the claim, that they'll most likely deny or reduce it if there's no substantiating evidence. So the short answer is it doesn't preclude you from claiming. You can definitely still claim. It just puts the claim at a bigger risk if it's chosen for audit. And then going forward, it's something that we can help them with to put different processes in place to make sure that the tracking is actually happening.
And then we have one question that's open up to the panel. It says, if my company has a federal registration and the registration is in one of the provinces, but I'm working in 2 provinces, does the company have to be registered in both provinces?
Yes, it does. It's a very simple answer, but obviously we can evaluate what is the nature of your business in the other province and see if that needs to be done or not.
And then, Chris, this looks like this might be a question for you. It says, how can a small American management consulting firm expand in Canada, and what type of visa is required for consultants?
Okay, so on the visa issue, that's more of a legal question that I would put the person in touch with. and that would kind of determine what province would be best suited for that person, maybe geographically or so forth. So again, that is a question that should be handled by a legal advisor.
And the visa requirements are not any different than when we think of somebody coming to work in the U.S. It's similar. You just need to apply and get an approval and stuff. If you are a U.S. national, getting a work permit to go work in Canada is typically not very hard. You know, whether it's a law firm or somebody like Global Upside, it can be done. It's just a process that has to be followed in advance.
And thank you. And Ragu, looks like this one might be for you. It says tax implications for employees on options versus RSUs in a private company.
So the nature of the company has very little significance in terms of private versus public. The issue really is that every country treats options, RSUs, equity compensation differently, and we will need to understand your particular situation to be able to give you a better answer than that. But you know, it depends on when the gain on this is taxed. Is it at the grant time? Is it at the vesting time? Is it at the exercise time or the eventual sale? And those are various factors you need to consider and how it impacts the employee.
And thank you, panelists. We would like to go ahead and invite you guys to do your closing remarks. We're reaching towards the end of our webinar.
Maybe, is it all right for me to go?
Yes, please.
Yeah, so this is Chris from the province of BC. And I think just to put in context the role that we play in your expansion into Canada, whether it be British Columbia or another location, is we handle a lot of the softer side. So Ragu and Global HR and Jeff and at Boast will handle the technical issues and the legal considerations and the HR considerations. Those are the ways that we put people in touch, companies in touch with advisors like that. But if you're looking at how does BC compare to Toronto, for example, in terms of cost of employees, in terms of real estate, if you have questions about how do you access talent, how do you connect with universities, you know, do a comparison across Canada, that's where we come in and play a role. So for anyone that is kind of grappling with those types of considerations, that's where you can reach out to us to talk not just about BC, but talk about Canada, where I said earlier that we can put you in touch with our colleagues and the federal government here in the U.S. that can help you with that. So that's what I'd like to leave you with. Any considerations outside of what was talked about today, we'll be able to help you.
Thank you, Chris. And Ragu, you want to go ahead and provide your closing remarks?
Yeah, you know, there's a lot of information shared today. Obviously, if you have questions, feel free to call one of the panelists. But just make sure that when you venture out into a new country, if you haven't done business, and even if you have done business, be mindful that there are a lot of things that you need to worry about, and get professional help versus trying to do it yourself, because there's a lot of requirements, there's a lot of people you need to consult, and if you engage with a not so reputable firm or any one of those partners that you need, you can get in trouble, and so just be careful.
Thank you, Ragu. And now Jeff?
Yeah, so you'll see on the screen there's my phone number and my email address. As you have questions, this is a very powerful program. When you can get back 64% of what you're spending on your employee salaries who are doing your development, it really compounds over time. So it's not something to just say, oh, it's a tax credit, let's not think about it. So feel free to send me an email. I'm more than happy to talk you through it and see if there's a way for you to claim.
Thank you, everyone, for attending. Like the panelist said, if you have any other questions, please contact them. Their contact information is in the screen in front of you. On behalf of Global Upside and our presenters, thank you, everyone, for joining today, and have a great rest of the day.